Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report. Today's date is November 30th, 2022. We have Fed Chair Powell speaking at 1:30 p.m. ET today, where the market is hoping to see if he's a little bit more dovish over the last since the FOMC rate decision, or does he keep the hard line as far as inflation and being a little bit more hawkish like he was after the rate decision and during his press conference. So let's get into the technicals to see what the market is saying, where the risks, where the biases going into that key event later this afternoon. We'll start with the euro versus US dollar, and as you can see, the price action has been a lot up and down of late. If we go all the way back to here and put a little box around this trading area, we've seen the price move to the upside, we've seen the price move to the downside, we've seen the price move to the upside, and the price move more in the middle here as the market prepares for the Fed chair. We have the 100 and 200 hour moving averages in play, and for most of the trading day after we move back into that, at least in the London session here, we've seen the price trade in between the 100 hour moving average at 1.0381 and the 200 hour moving average below at 1.03487. That's the blue line, the green line right here. The price did move above that level briefly after the data this morning, which saw the ADP number come in weaker than expectations. We saw the dollar move down a little bit, and the price could not sustain the momentum above that level. We're currently trading within these extremes here, the hourly extremes, moving average extremes at 103.58. So markets are sitting quietly for the euro versus US dollar, waiting for the next shove. Will that come with the Fed's chair's speech this afternoon? We will see, but getting above the 100-hour moving average and staying above would be more bullish for the paired, weaker for the dollar. Moving below the 200-hour moving average would increase the dollar's bullishness and lead to hopeful what traders hope would be lower levels down toward this swing area. On the top side, we have this high right here, and we can add another high right through here as next targets, followed by the swing highs that we saw in the month of November, coming between 104.81 and 104.96. We moved to the new high on Monday's trade, but could not sustain momentum and rotated back to the downside. We know the story. So that's the euro versus US dollar. Let's take a look at the dollar versus yen. And we're seeing some buying in the dollar versus yen in trading here today, but it too is more or less confined in up-down trading ranges over the last few weeks. They may be wide, but they are real. Up, down, up, and now a little bit more up. We are below the 200-hour moving average at 139.68. We need to get above that moving average in order to increase the bullish bias here for this currency pair. As it is right now, we are more neutral with the move back above the 100-hour moving average and move to the upside here in early U.S. trading. So we'll see if that momentum can continue through the 200-hour moving average, in which case the bias shifts a little bit more to the bullish side in this up and down trading range for the dollar versus yen. If the price should go below the 100-hour moving average, all bets are off, especially after the break to the upside. The buyers are making a play. We'll see if they can keep that play going with an extension to the 200-hour moving average and see if the price can get above that level. We could also see sellers against the 200-hour moving average. Price has been below that level over the last 1, 2, 3, 4, 4.5 days below that 200-hour moving average. So be aware, be prepared. 200-hour moving average is going to be key on the top side. Buyers are making a play right now. Let's take a look at the sterling versus U.S. dollar. And like the euro versus U.S. dollar, we are, and the dollar versus yen, we're in between the 100 and 200-hour moving averages. See the pattern here. Traders are waiting for the market to give a kickstart to this and to the pairs, to the dollar, to the currencies, and that will probably come with the Fed Powell's speech at later on this afternoon. We do have a pretty decent support down here where the market found support buyers in trading this week. That area was developed way back here, where we had a number of swing highs coming in here, creating a ceiling. Admittedly, we moved above it here, but then created a lower ceiling before breaking to the upside here. And then we found support against that old area through here this week. And that's been a key floor here for this pair. If the price is able to move lower and get below the 200-hour moving average and this swing area right here, then the selling pressure should increase for the sterling versus US dollar. Alternatively, a move above the 100-hour moving average would tilt the bias more to the upside in this currency pair in trading here today. Let's take a look at the dollar versus Canada. What we saw yesterday in the dollar versus Canada was a sharp move to the upside here. This is the hourly chart. That was off the back of RBC, Royal Bank of Canada, take over the HSBC Canada. So that's the U.S. Bank's Canadian operations. So what does that require? That requires the RBC buying dollars to buy the HSBC Canada, and that was this is the result of that mergers and acquisitions that forced the dollar versus Canada sharply to the upside. Even though we had GDP data that came out much stronger than expected in Canada yesterday, we saw the Canadian dollar get weaker. The dollar gets stronger. Why? Because they're buying the dollars to buy the bank. So it all makes sense now. What we've seen, ultimately the buying stopped and we saw a rotation back to the downside. And that rotation, this is a daily chart of this high to the low here. The 50% retracement comes at 136.01. And the price high today has been able to stay below that level. Now on the downside, we have another support level. That is so far holding support or holding the downside, I should say. And, or I could say both, I guess. But you look at these lows through here. And the market waffled up and down here, but we came back up to that level. So a number of different lows here and then became a ceiling. And then we broke above that level in trading yesterday, and we came back down to it in trading today. So this level at the 134.93, I'm earmarking as a key level on the downside. If the price goes below that level, that would be more bearish. We're currently trading 135.17. So about 17 plus 7, 24 pips away from that level at the moment. But we did find support against that level in early trading here today. Be aware, be prepared on the top side, get above the 50% retracement. We'll be more bullish for the dollar versus Canada. So there you have a look at some of the major currency pairs in the morning Forex technical report. My name is Greg Michalowski. Key event this afternoon, we'll see how it all plays out. Looking for the next shove in this pair. Maybe we'll get it from the chair, maybe we won't. Maybe we have to wait for the employment report on Friday. That's another key event this week. Good fortune with your trading. Bye-bye now.